Support and resistance levels are horizontal price levels that typically connect price bar highs to other price bar highs or lows to other lows, forming horizontal levels on a price chart. A support or resistance level is formed when a market's price action reverses and changes direction, leaving behind a peak or swing point in the market. Price will often respect these support and resistance levels. In other words, they tend to contain price movements until, of course, price breaks through them. Support and resistance levels are integral to any financial market. Market participants define these levels, which essentially represent supply and demand, or the order flow, which can rapidly shift. I'm going to tell you the basic method to find support and resistance levels. If you want to learn advanced methods to find support and resistance levels, just follow the channel. This support and resistance strategy will enable you to take trades exactly at the area price will reverse. Trading support and resistance lines are critical for every trader to implement into their system. Horizontal support and resistance Forex trading strategy is one of the most popular form of trading strategies used by many traders all over the world because it's based on solid trading fundamentals of support and resistance. How to find support and resistance levels. You can use any time frame you want, whatever it be, 1 minute or weekly. You just need to see where price has moved up, hit a resistance level and reversed from, or price has moved down, hit a support level and bounced back up from. Those are very basic ideas of support and resistance. In order to find support and resistance levels, just follow the following steps. Look at the chart. Look for a series of low points where price does not fall below this any further. This is your support level. Look for the series of high points where price does not rise above this any further. This is your resistance level. The more the price bounces off this support and resistance levels, the stronger these levels become. This formula applies on every time frame and on every currency pair. Buying rules. Once a support level is identified, draw a horizontal support line and wait for the price to fall back to that support line. When price falls back and touches the support line, wait for that candlesticks to close and place a buy stop order 2 to 5 pips above that high of the candlestick that touches the point line, or place a buy limit order so when price touches it, it activates it and your trade will be placed. Or you can buy manually at that market price when price touches that support level. The suggested stop loss is 10 to 30 pips. This depends on what time frame you use as well. Larger time frames may require a larger stop loss. You can place your take profit on resistance level above. Set them within the resistance levels so there is a greater chance of your profit target being hit. Selling rules. Once a resistance level is identified, draw a horizontal support line and wait for the price to rise up back to that line. When price rises back up and touches the resistance level, wait for that candlesticks to close and place a sell stop order 2 to 5 pips below that low of the candlestick that touches the resistance line. or place a sell limit order so when price reaches it, it activates it and your trade will be placed. Or you can sell manually at market price when price touches that level. The suggested stop loss is 5 to 30 pips. This depends on what time frame you use as well. Larger time frames may require a larger stop loss. You can place your take profit on the support level below. Set them within the support levels so there is a greater chance for your profit target being hit. Trade management. Consider closing half of your position when price levels of halfway point between the support and resistance levels. Move stop loss and trial stop loss your profitable trades to lock in profit as your trade moves in the favor. Now let's talk about some pros and cons of this strategy. Let's start with the pros of this strategy. Many traders watch and trade this setup and it's quite predictable what price does around support and resistance levels. The use of price action trading, especially the use of reversal candlesticks, will greatly enhance your trade entry. Great risk to reward ratio for traders that go according to plan. Stop loss is tight and placed at ideal locations, behind support and resistance levels, therefore less chances of getting stopped out permanently. Cons of this strategy. Nothing is 100% certain. Price can break the levels and not obey them. Sometimes there will be false break or spikes only to obey it later. So that is it for today's video. I hope you enjoyed this video and learned something new. So if you did, then please subscribe to this channel, hit that like button and stay updated. Till next time, take care.